This is Innovation Connected, coming to you from the World Economic Forum in Davos, a podcast by Tenity.
My name is Max Planck. I'm a venture partner for Tenity. I would like to welcome my esteemed guest, Alex from Singapore. Welcome.
Thank you, Max. Thank you, Max.
Please give us a big background about your career so far and where you're currently focusing on.
Oh, sure. Well, by background, I'm a banker. It's an interesting question, right? What do you write on the form for those who still have to write forms when you enter a country at immigration? Do you say banker, technologist, lawyer, whatever? And I've been writing banker for many years, and I still pinch myself when, I still write banker for some reason. So I've been a banker for a long time, done different things over time within banking, across different geographies, but I've been a banker over time. For the last 7 years, I set up with Standard Chartered SC Ventures. And SC Ventures is about rewiring the DNA in banking and financial services. And that emanates from banking. That emanates from my experiences as a banker, wanting to do things for clients, but not quite able to do that. And wanting to serve clients in a certain way, but not quite able to do that. Wanting to fulfill some expectations from societies, from markets, from a lot of the stakeholders we work with. And realizing that bank was very willing to do it. I had the budget. I was senior enough in some ways to do things. But the reasons why we couldn't do it was structural.
Yeah.
And we weren't set up to do it. We were set up to do things in a certain way and not in a different way.
Yeah.
And so the idea came up to start again and do it on the side and build little ventures.
Yes.
And that's SC Ventures. Essentially, we're predominantly a venture builder. We also deploy capital in the partners we work with.
Yes.
We do have an innovation lab. We have intrapreneurs. We have a fintech bridge portal. We have a number of capabilities that support what we do essentially, which is we build ventures that will constitute, in our conviction, the future of financial services and banking.
Okay. And what's the mandate you have? Is it a strategic mandate or being profitable or having specific?
Oh, it's interesting. I get asked are you strategic or financial?
Yes.
I think if you're not getting the right returns, then you have no right to exist.
Fair point,
Okay.
Yeah.
So getting VC type returns, which taking VC type risk is what we should be getting, is existential. It's there's no discussion here. So the operating constraint is get VC type returns.
Yes.
Within that operating constraint, we're building ventures that are relevant for the future of banking and financial services. And that in many ways is strategic. I expect transformational impact from it on the industry, accordingly on the bank that backs us. And that's the scope, that's the mandate.
Yeah.
So it's not either or, it has to be both.
Yes, but let's think about European banks. I think there's often a big constraint, right, to start something like that. Couple started with CVCs. What's your take on CVCs?
Doesn't work. It never has. It never has. Look, CVCs typically either fail or disappoint, right? And by the time they disappoint, they get cut off too soon. The investment cycle is a pretty long investment cycle, yes. And so you never get to know. Why is that in the first place? You could say it's too small to really matter, but I don't think that's quite the point, because ventures are small too. They start small at least, and so it's less about size than you're either too close or you're too far. When you're too close, you're very strategic. You're inside the mothership. It can be a bank, it can be a corporate. That also means, sure, you're strategic, but you can justify a lot of stupid things by calling them strategic, right? Then at 11th hour, somebody in the credit committee says, I like this, and you become unreliable. And so you get adversely selected by other VCs. People hate dealing with you for a variety of reasons. Too close, too strategic, and this will fail, right? By the way, by the time you get adversely selected, returns at some point dip, at which point somebody cuts you off, and again, it's too soon. You haven't had the time to go through the cycle. If you're completely separate and distinct, it could be financially worthwhile in its own right, but then at times you question, what does the mothership get out of it?
Yes.
Right? And so fair amount of sponsors have been disappointed by efforts they've backed, in part because we've invested in a bunch of little startups, and so what? There's no knowledge transfer. There's very little usage. There's let alone people transfer. And so the impact isn't nearly as meaningful as what people were expecting. So when we started SC Ventures, that initial conviction was, we're not going to be a CVC. We will have a lab, but we're not going to do innovation theater. It's kind of nice, the beanbags and all this. It was cute. A few years ago there was a lot of that going on, and a few people within the organization were keen for it. It's also like marketing is the first thing that you're going to cut when times get a little tight, and the impact is not very meaningful. And by the way, I would have been the wrong guy to do it. It's a lot of this is preaching and advocacy, and at some point people will get tired of listening to this. So I thought that would be an important part of how we operate and how we originate ideas and all that. But just doing it for the sake of it is really hard. And by the way, changing an organization entirely from within is really hard.
Yes.
And if you add to this a layer of we're a bank, we're regulated, we have a bunch of policymakers and stakeholders, it becomes even harder. So there's lots of inertia you're up against if you're trying to change everything from within. A number of things have to be done within, but not everything can. And so we came to the conclusion that the only way we had a shot at transformation was to build ventures, and then we deploy capital in the context of building. We invest in some of the partners we deal with, we work with, be it in the context of building ventures or deploying that on a greater scale. We do have intrapreneurs, because a lot of ideas come out of intrapreneurs within the bank, and they can be very good 0 to 1 individuals for a venture, and then the 0 to 1 person may or may not be the 1 to 10, let alone 10 to 100 person for a venture. But it's a source of inspiration as our clients of the bank, as our partners we deal with. And so the lab plays a role, deploying capital plays a role, but ultimately what we're doing is building the businesses that will constitute the next generation of financial services across the themes that we think are relevant for banking in the future.
But and why do you think there are still corporate VCs in banking, or still new ones built?
It's a shortcut. Yeah, I'm paying lip service to innovation.
Yes.
We did a hackathon. I nailed it. So when an organization is focused on the next quarter of and results and all this, and understandably people have other priorities on arguably also a greater scale and something more existential, it is tempting to say, well, we just set up a fund, or we just did this, or we just opened a lab and tick that box. We had no interest in box ticking. We genuinely think that we need to do something different in this industry, and that is what it takes to reconcile what societies expect from their banks and what banks are delivering to clients, and so you had to be more meaningful than just paying lip service to it.
I mean, it's quite impressive, and it's quite rare also because there's a lot happening where people just cover or try to keep their jobs, right? In that area.
Sure. And you could say it's evil, and the job preservation is that's the evil empire that strikes back, and antibodies and all these things. I will say most of the time people want to change, they want to succeed, they don't want to be evil. And so the goodwill is generally speaking not the problem in organizations, but the setup is the ability to the governance. I'm going to get a little boring. The governance
it's quite relevant. I think
is very relevant.
It's super relevant.
It's a difference between existing and non-existing.
Yes, exactly.
In the
or
context,
failing,
or
or winning.
In the context of a regulated financial institution, which is where ultimately we have to operate within the risk appetite as defined of a regulated group. Very relevant how you're going to manage your risk, be it conduct of business or operational risk or technology risk or cybersecurity risk or financial crime compliance. All these things are relevant. So it's not that easy.
No, it's absolutely not.
And so the hence the chapter on governance, which is really important. But again, in order for it to be real, the venture has to be commercially viable in its own right.
Yes.
Right? If it's a tool or a toy that I built for one of the business units, that interest will fade. But more importantly, I will never know if it really was commercially viable. If a venture is forced to go and get their own clients and their own funding, that's the validation I think it takes to know if we're onto something, and then ultimately scale it and create a business which then is adjacent to the bank, can be used by the mothership, can be plugged into by other banks, can be and becomes part of the ecosystem. And that's where the impact comes in. Yes. Once these businesses are validated, it is impactful for the banks. Our Standard Chartered, our bank wouldn't be in digital assets if it weren't for the fact that we started building digital assets ventures, beginning with custody, moving on to brokerage, and now tokenization, starting 7 years ago. And at some point, we built a bench of talent. We have risk people, legal, finance people, familiar with an industry that most banks aren't familiar with still.
Yeah.
And so at that point, the combination of what a bank can do and what the little ventures have achieved becomes a very powerful proposition for the industry.
Yeah, I mean, you test the market. So is there really a problem which is solved, or is there a need or a demand, right? This is what you get then.
And we get a lot of churn. So, great idea, wrong team.
Yeah.
But also good team, nice people, but sorry, didn't work.
Not relevant. Yeah.
Not relevant.
Yeah.
Or not big enough. Or didn't scale.
Yeah.
Some great, in fact, some great ideas that we tried in smallish markets or markets where the need was existing but not so huge, and where we thought, well, not here, let's do it there, because that's more relevant in that big market where we think we can scale. So lots of pivoting. People think, how many ideas do you kill? Well, we kill all the time just by not acting on something, right? So it's a very tiny percentage of the things we look at that will ultimately survive. But it's also a lot of iterations, a lot of churning, a lot of changing things, and sometimes little things, sometimes big things. But none of the surviving ventures has not pivoted, as we say in the jargon, several times, right?
Impossible.
They all do. It's impossible, and that's kind of cool about it, right?
But it's really impressive. I mean, you said you're a banker, and now you build it something like that. I mean, this is a complete mindset shift, right? I mean, I guess, or maybe.
So yes and no.
Okay.
Yes and no. First, let me push back, right? Banks are supposed to be audacious, pioneering, enable growth. The reason why all banks were created was to enable trade in dangerous parts of the world, resolve information asymmetries. And so banks have done great things, from building the infrastructure of the beautiful country I'm in now, bridges and tunnels, to trade finance between Asia and Europe, or the UK, which is the origin of Standard Chartered. We were initially a trade bank.
Yeah.
Banks can be pioneering. I'm advocating that between a financial crisis, a sovereign debt crisis, compliance fines, a lot of banks have kind of lost their mojo, if I can say it that way, meaning become risk averse, internally focused, process oriented, and in being that way, which by the way was not negotiable. It was survival. It was existential. You got to repair your balance sheet so you can exist before you can be audacious again. And so I'm not reproachful, but I'm just observing that in that period of time, these organizations have lost sight a bit of what clients actually want.
Yeah,
right?
change the role in society as well.
Support my SMEs. Preserve my wealth and grow it, and do things in a certain way because I expect to be served in a certain way because I can get it from Amazon and I can get it from Apple, and so why can't I get it from you? Simple as that, right? And so there was just an element of turning things on their head and use the DNA of banking, which is valuable conduct of business, integrity, protection of what's most important to and sensitive to you. If I protect your money, I'll protect your data, I'll protect you, right? With all the integrity that is entrenched in the DNA.
Yeah.
And so we're using this, and in that sense, still a banker. Now, when you're in a large organization, you acquire certain reflexes, and these reflexes are great at scale, but they're not great when you're trying to create. So as a personal matter, yeah, you're right. It's a change of mindset because you have to unlearn certain things and relearn others. And I'll give you an example. In a large organization, I see two people doing the same thing. That's inefficient. I don't like inefficiency. You guys should come together, align. In creation, there's no point going efficiently from A to B if you don't really know where B is. So I might as well tolerate the inefficiency, let them get on with it, see who gets there or somewhere first, and then recycle the other team. So there's a number of things that you have to do differently in the context of innovation creation than you would in a large organization, and that's very personal sometimes.
Totally,
right? That's very personal. Ask me a question in the bank, you'll get an answer. Ask me a question in one of the ventures. Well, my job is not to give you the answer. Typically, I don't have it. My job is to provide a platform where you can figure out the answer.
Yes.
Very different mindset, etc., etc. Right?
Yeah. No, I mean, also, I think it would be also interesting to understand how that in the end started, because you need to get a lot of trust from the corporate to say, like, okay, we would like to go that way. We would like to go different. We allocate a specific amount of money. How did that started, and what were the internal discussions? I mean, what you can disclose, but I think that's super valuable because, yeah, it's not happening like that in other, and then there's a lot of, let's say, covering also in boardrooms to say, no, it's too risky, we don't do that. It's a different mindset. It has a bit more long-term planning.
Yeah, no, it's a very fair question. I think I can disclose pretty much everything. For a start, I need to give full credit to Standard Chartered, the bank, and its management. That includes the CEO and that includes the board, for allowing us to exist.
Yes.
It takes some guts to cannibalize yourself. A lot of people say we're going to cannibalize ourselves because otherwise someone will do it. It takes more. It takes guts. It takes conviction as well to actually do it and build a digital bank in a market where you already have a bank and see what happens.
Yeah.
And so SC Ventures would not exist if you weren't for that conviction and sort of fence that management erected around us when we were a small tree and had to be a little protected, and that conviction grew over time, obviously, as we were building relevant things and getting some results, and so we've come some way, and well, the jury's out in a number of different ways. We've also reinforced that conviction and credibility, but it took the conviction from management in the first place, and we wouldn't be here without it. And so that's very important. We've told the story. The story is in a book, which we've written as a team. It's partly my notes, but it's also the team. So the risk person writes a chapter on risk in venture building in a bank. The finance person did the same. The compliance person did the same. The incubation person did the same, the fund management person, etc. And then we asked some of the early ventures to tell their stories, the 0 to 1 stories. Some of these ventures no longer really exist in their form at the time. Some have pivoted, come a long way, done different things. But it's essentially a bundle of stories, which I'm hoping brings to light how this all came about. Bill, who's the CEO of the bank, wrote the foreword, meaning it's not only are we disclosing it, but we really stand behind it.
Wow.
Because we think it's relevant, and it's relevant
Super.
for banking, it's relevant for our clients, and it's how we've advanced the cause of serving clients the way they want to be served, essentially.
Super impressive. I mean, is this that
So
book?
that-
Yeah.
That's my book.
It's not product
and we
placement,
should
but-
provide a link on our website,
Yes,
and
totally.
so people can.
It's
get
not
it.
out yet, but it's a really
This is a
copy.
not for sale copy we had for Switzerland.
Exactly.
and we will have one soon.
No, it's impressive. Also, that you have things inside which are maybe not worked so well, and also looked at it from a different angle.
Absolutely, yeah. All the mistakes we made. The point is you have to make your mistakes. If
Yes.
you're going to build, you're going to make mistakes, and that is where, like an athlete, sort of working on a sport. You build muscles, and you have to train these muscles, and you don't train these muscles without pushing the limits and getting out of your comfort zone and all those things. That's exactly what the book is. Which is organizationally and at some individual level too.
Yeah, I mean, it's really super impressive. I mean, usually, or at least what we have seen here in Europe, that banks, I don't know, don't fail, or they don't let those disclose how they failed, right?
Right.
That's more a problem. It's a cultural thing. So also about that, what you said before, when you build something like that, you have to have people in the company which are entrepreneurs, which are, let's say, emotionally stable enough to fail and go on and not get frightened, right? It's
So you
probably
talk about resilience.
Yes,
Yeah, you
I
talk
think
about
the
resilience.
system is very.
Part of the secret sauce of building a venture in the context of a regulated financial institution is to mix it up a bit. So pure entrepreneurs don't know what they don't know when it comes to a regulatory environment and operating that, and that's not great. And we've seen this a few times in the last few years already. how that can manifest itself in a way that is not very good for clients. Conversely, bankers aren't typically entrepreneurs and need to understand the hard way that you only get to eat what you kill, and when the money runs out, the money runs out, and all these things. And by the way, these groups of individuals don't normally work together. They don't actually like
Cultural
each other
clash.
very much. They don't like each other. They look down on each other. And it's we tell the story in the book when the bankers met the entrepreneurs, and so the magic happens when you force them together. And the diverse teams, I mean, you can think of diversity on many dimensions. Obviously gender, nationalities, culture, and all this, but also ex-bankers and entrepreneurs. Is that diversity is when you force it and when it works, where some of the magic happens, I'd say. To your point on failure, I don't like failing again, but I don't like failing either. But in the same time, it's a question of semantics, maybe. Some failure is unacceptable. Regulatory breach, that's not good. Sending a payment to the wrong place, that's not ideal, right? Losing, cybersecurity, I don't get a shortcut, really. Failure in the context of, well, that didn't work, let's do something different, let's change it, let's iterate it. I would call this learning. I would call this resilience as opposed to failure, and that's exactly what we're in for. So it's a element of redefining what you mean by failure. The one thing we cannot do is what a large organization, certainly a large bank, would do, which is a year of analysis, another year of debating, and then let's build something really big at scale. $500 million later, that's not what clients wanted, or that didn't work in the back office, or whatever. And every large organization has that story. I exaggerate a little bit, but every large organization has that story. So there's an element of method as well, which is start small, test, iterate, etc., which we obviously apply to ourselves, and that needs to be different from the way the corporate would do it.
So no consultants involved.
No, we've worked with consultants in a variety of different ways, right? We have accountants, we have business services, generally speaking. In terms of the venture builders, what we have found is at times the business model is I'll help you build a venture, I'll help you hire a team, I know how to build that company, and then I'll sell it back to you, and that's the exit. Which I understand why you would want to de-risk this way. But the one thing we tell all of our ventures is there's one exit you cannot rely on, is that I'll take you back. You're going to have to find your own funds. You're going to have to find your own exit. So you're a real company.
Real company.
And at that point, that consulting business model breaks down because I don't pay by the hour. We get paid for the outcomes that we create. And that's a very different mindset versus consultancies.
Okay, yeah, totally. In which regions are you active at the moment?
So we operate from a few hubs, and the ventures we built outside of the hubs are predominantly across Asia, Africa, and the Middle East. Why? Because the bank that backs us has a presence, a footprint, as we call it, across Asia, 80%, Africa, and very importantly, the Middle East, which is a growing part of it. And we think that's an edge, right? We have, if I put it all together, we have the edge of operating with the DNA of a regulated financial institution, and we have the edge of understanding and operating in markets where not a whole, attractive to a lot of people, but where not a whole lot of people know how to operate, from India to Indonesia to sub-Saharan Africa, et cetera, et cetera. So when building ventures, I wasn't going to build a digital bank in the UK, but Hong Kong, that makes sense. Commerce for SMEs in India, that makes a lot of sense. Banking as a service from Indonesia to the Middle East, that makes a lot of sense. Consumer financing in East Africa, so they're the parts of the world which are growing fast, really relevant for the future in our minds, but also hard to operate. Where we have that competitive edge, and so that's where most of the ventures are. I have to add that we relocated a number of our ventures to the west, to London. As we get closer to institutional clients, as we get closer to some of the regulators in some of the businesses that are regulated, and that makes sense as well. But again, the edge is important. In other words, I'd like to know that the fact we're doing this, the fact we're building a venture, is something that we can do, and not a whole lot of other people can do the same, and that's our unfair advantage, if you will. So
can you walk us through how that would work? So imagine you would like to build something in Saudi. You have the idea in your office in Hong Kong or Singapore. How does it work? You think that's maybe something which needs to be built in Saudi, or there's a market demand? I mean, what happens then?
Saudi as an example. And Saudi is a great place.
Yes, it could be anywhere. It's just, but it's also culturally very different. I mean, there's a high demand probably for new companies. There's a young population, but it's also not so easy to access, right?
Sure.
So therefore, and I don't know, where's the decision or the first idea comes from? It comes maybe from Asia, and then you have an internal meeting. You say, hey, we should do that, or how does it? I mean, just for the audience to get a bit more tangible how that works.
Well, for start, a group of us are the operating members. We function like partners, work together, discuss a lot together, and not all of us are in Asia. We are across Asia, Africa, and the Middle East, and London. And so we try and not be overly Singapore or Hong Kong centric, which is where we started. But we try and not be, too bound to any geography. Why the Middle East? Why Saudi? This is the hotspot of nation building as we speak. There's visionary leaders. There's very specific visions that have a whole bunch of consequences in terms of what it means for the economy, what it means for the ecosystem, from capital to academia to technology to infrastructure, and all this is happening. Now, to your point, every market is different. So if you listen to the CTO of a venture, I built this, I can replicate it 20 times in 20. Not true. Technology you might transport, but the go-to-market will be very different every time. And so you have to make sure that the problem you're solving is a problem worth solving in that particular part of the world. You're not going to do this at a distance. You're going to do this on the ground. Yes. So how this starts is, number one, we'll have a presence on the ground. Could be small initially, but it's a presence. And number two, we will be looking for partners. In fact, there's very little we want to do by ourselves. We do almost everything in partnership. It can be a technology partnership, it can be a JV, it can be a co-investment, it can be a commercial anchor, ideally some permutation or all of the above. But the first thing we'll do with that small presence on the ground is look for like-minded partners who want to build a business. And once we're onto something that we think has legs as an idea, then we'll get on building. That implies hiring people, that implies building some technology, that implies et cetera, all the things that we do in venture building, generally speaking.
So first it's the destination, and secondly is then the solution. Because an example, you said you first go on the ground to look for partners, but then you maybe don't have the idea yet what you really would like to do. So, or did I get it wrong?
You're right. There's an element of that. There's an element of narrowing down to a few ideas with the partners we engage with. So we may have a hunch, but the initial hunch is typically not going to be the final venture. Yeah. So that is a discussion process, right? With partners, with stakeholders, with clients. Prior to launching a venture, we'll test the idea with a number of ideally clients or end users, and so all this needs to happen. Sometimes there's a concept, which is we operate within themes. I should mention, for retail customers, we think financial services should be embedded in your lives. So that's how we came to build a digital bank, but also banking as a service and lifestyle apps and digital wealth platforms and payments serving the online economy and all that. That's one theme. Another one for corporates is SMEs, forgotten middle, very important parts of large company supply chains, but underserved. Trade financing gaps, supply chain financing automation, applying insights to the operational management of supply chain. All these this is another vertical. And then I would say across the board, because I think ultimately this is the rails we'll operate with, but initially it's a more narrow industry. It's digital assets. Initially, cryptocurrencies, are they here to stay? Yeah, I think they're here to stay. But ultimately, we're tokenizing a whole bunch of assets as we speak, which will be operating on different rails, and they will be the rails of that we operate financial services of tomorrow. So within these themes, that gives us a number of ideas and precedents. And then the question is, in the context of say Saudi, but I could have said the UAE, or I could have said Kenya. Is this relevant? How big is it? And is it worth doing? And and can we do it? And are we well positioned to do it? And do we have the right partners to do it? And if we tick a lot of these boxes, then it's a venture in the making.
No, absolutely, quite impressive. We are here at the World Economic Forum. So, I mean, what are your main takeaways so far that week?
Hey, it's my takeaways. I think there's a bit of doom and gloom in Europe at the moment, which is remarkable if you juxtapose it to the United States, where Donald Trump's stolen a bit of the show, and so I'm not qualified to opine on the individual and the politics, but I can see a real difference between France, Germany, UK, sort of lots of self-flagellation going on, and feeling it's hard to do business and it's hard to invest there, and it's where are we going now? Versus the situation in the US, where 50% of the country is thrilled and another 50% is quite the opposite. But there's this new era where people are wondering what does it mean for us. So fair amount of questions that people are asking themselves. Some more hopefully than others. But as in, this could be good for business. This could be good for digital assets. This could be good for more business friendly climate. And then some real concerns around the way this is being handled and personalities involved. And as I reflect on the conversations I've been listening to and participating in, beyond the usual venture building and role of technology and all this, I think that that meeting is a lot of reflection, at times self-reflection on what are we doing now, where are we going, and if the world's changing, what does that mean for us, for my business, for my shareholders, for my stakeholders, for my societies, and it's perplexing in some ways. I don't think I have the answers. Yeah. Other than perhaps getting on with what we think is right, from sustainability ventures to serving SMEs to enabling growth, and my mind start there, and it should be good. It should be conducive to addressing the problems we're facing, be it in Western Europe or in emerging markets, generally speaking.
Yeah, it's maybe about doing, not only talking about regulation.
Exactly.
I had the feeling this year that this was a very big topic in any field.
People feel a little hampered, right?
Yes.
We're stuck here. Somebody used the word, we're in the purgatory, regulation purgatory, and good news is it's not quite hell. But it's not great either, and so getting on with things, getting on with something, and perhaps rediscovering the somewhat more inspiring pioneering spirit of business, of banking as a subset of broader business, is what we need to do, and that is why business is important in society, and that is why business is a force for good and improvement, and I believe in that, and that's what we're doing.
Yeah. Can you say where do you see, in which geography you see the pioneering spirit at the moment?
Oh, no question. Our footprint is where it's happening. So our footprint, Asia, Africa, and the Middle East. In no particular order, but this is where I see a bit of growth, but also people wanting to get on with something. People with the conviction that the next generation is worth doing it for. Yes. And will be better off than the old generation. And having that confidence is a huge driver of investment and nation building sometimes, or just building great businesses for the next generation. And so that's what is happening right now.
Wow, yeah. Thank you very much for that. How long will you stay in Switzerland? When you leave?
I have some attachments in Switzerland, as you mentioned before. Chunk of my family lives here, and so I'll spend a few more days in Switzerland, and then I'll start making my way back to Asia. I'm based in Singapore, via London, Middle East, and at some point back home. Yeah.
Perfect. Thank you very much. Thank you for having you, and all the best.
Thank you.
Thank you. Bye.